Good morning. All right, not much of a recovery after such a slam dunk yesterday. So prices went down to where they should and got there relatively quickly before they started chopping around. And so now that they're down here, and we actually prefer, prices getting down to the next level of support. You see where it opened, S&P futures opened up at that first level of support and didn't take long for it sliced through it and made it down to the next one. And this is such a simple concept of looking to the left for support and resistance. It's simple. You don't have to think about where you're drawing lines and levels and so on and so forth. Basically, is there a void? If there is, theoretically should go on to the next level unless it creates support at a higher point. So now that it is down here, at least stabilization is what's expected after such an extreme move. And so with that being said, it's like, okay, how far can it bounce? As intraday traders, maybe we can take advantage of a bounce up to, maybe up to this level here. We'll see. Here is the bottoming process that occurred at the end of the day and the overnight rally. And now there was a retest. So we have a larger area of support in place that was created from yesterday and overnight. And it's really just kind of dead in the water here. So, we'll see if it can start to lift off from here or whether it's just going down to the low. Now, so essentially we've got a trading range going on here where this was the high point, and let's just include that mess over there for the moment being. And the reason I'm including it is while this was a deep retracement and what I would call neutralizing this area as a reference point, the retracement back down, toward this low it actually negated the bullishness of this move right here at resistance. So the depth of this retracement and sideways price action to open up the door to possibly coming up here, but that failed, right? So here was the break, and now buyers stepped up again in this area. So you want to call this a value area, make up any name other than saying, okay, now in this area of support, buyers are coming in somewhat hopefulness. Of course they are, because if they're buying here, they're hopeful that it'll come up to this level or who knows where, right? So 3291 would take it around here. And when we get a wide range bar, and this has a gap as well, but we just look at things kind of black and white initially and saying, okay, the halfway mark there, which is above 3260-ish, which puts it right about here where it came up to and then fell from. So far, prices are still in the lower half of the wide range bar. And we could get to that, Nick. I don't know. We'll see. I don't think it's a high quality. This is a 15, but I guess this is what you're looking at here. Could set up moving it lower. I'm kind of thinking that this morning we're in for some choppy price action, until this gets resolved one way or the other. So we've got an area of resistance above, an area of support below, and the ES is right in the middle of it. So take out your market coin, flip it, and decide on a direction. And in any event, the move to the next stopping point, whether it's high or low, isn't that far away, which is saying, hey, there isn't a tremendous opportunity here before it hits some level that is going to stop it. And traders are going to, step back now and say, okay, now what? Who wants to continue to take the offer to see if we can take it higher or drop lower? Now, common sense, which doesn't always work in the stock market, would would suggest that, breaking below here wouldn't result in a large move because it already moved from way up here to down here, regardless of the gap. What makes more sense is maybe a couple of days of flip-flopping around in this area and seeing what kind of pattern develops that could guide us as to which way things are going to go with something more than which would probably be a pretty fast up and down where the algos are probably beating up on each other and leaving bludgeoned traders, us, laying on the sidelines trying to get out of their way. So I'd be a little careful here. I mean, if the prices could break through here, well, now maybe we can get some momentum going there. And the downside, while it's got the void, initially, it's hard to kind of comprehend or accept a fast move after having moved from here to here. So I think chop is in order, but we'll see how it develops. All right, let's move on. And it's pretty much the same everywhere. Now, if we're going to get some break to the downside, probably the Qs are the better one to go with since it's got room to get all the way down here. I mean, you've got 9,000, a whole number, but, we would see if it stops there or not. Anyway, we've got the same scenario going on of a trading range, which you can see here on the 60-minute chart. You can look at a 5, what Nick is saying, looking at the 5 there. You're getting a little retest pattern here, as you can see it on the 15. But as we're still in the middle of the range here. I think it's susceptible to whipsaws. So, I would suggest if you're gonna, give it a shot, maybe do it with less contracts than you would with a better looking setup. All right. Dow, been the weaker, broke through support. So here's a move where it was relatively weak and rather whippy. That here's that correction that started January, and it rallied back up, made a new high, broke down through 2 prior swing lows, which in my rules says that this is now a downtrend, breaking down below that. And the weekly has now moved to a sideways trend because of the depth of retracement back down toward this major support point. So for the first time in a little while, we've got the weekly of the Dow futures in a sideways trend, the daily in a downtrend. Obviously, the hourly was down. It's kind of sideways here, and we're in the middle of the range just the same. Russell, trading range, a little more data there. Next level of support down here. And, so now pretty wide, whippy trading range. Similar, bottoming, rally up to resistance, look to the left, right there, coming back down. So buyers aren't stepping up here like taking charge, command of the situation, which leads me right back to the same conclusion, chop. Gold or oil, I should say, coming in onto some minor support here. It's stable. For me, stay away. Bonds up at that prior resistance there. This is probably going to be key here to keep an eye on. You can watch TLT if you don't have bond futures, TBT, which will be yield, which, as we all know, is going down. But let's just take a look at the monthly chart of this and just see, is there anything above? There's very little to stop this from going higher to the next reference point. That doesn't mean it can't pull back. Now, something that we've talked about in the past as far as reading momentum, and this move has momentum. So what we talk about with that is like when you get a move and here's your correction, does the next move clear with authority the prior high. Sometimes prices, I don't have an example here to show you. We could look at something else. But I've talked about how, indicator users, indicator methodology, where they look at their oscillators, right, whatever. And you get, say, maybe it's stalled here and you got a red bar just barely above the high. Well, they get their bearish divergence and it's their theory that, oh, it's going to roll over. Well, you can find out the hard way that that doesn't play out all the time. And many times a red bar doesn't mean nothing, or stalling momentum doesn't mean a whole heck of a lot, but we don't need indicators to read that. If this bar here was a red bar, we would say that momentum stalled because it just barely took out the high. Now, what we have here is that momentum did not stall. It consolidated and it moved fast again. So that is a powerful move. There's strong demand. Now, it doesn't mean it won't go sideways here or pull back a little bit, but it's based on these charts, it suggests being able to get up into this area. Now, so that has some negative implications for the stock market and the economy. And that's what I wanted to show you yesterday. These yields where, last year, this is where the shortest began to invert and we started getting that, talking head saying about the recession fears, and the markets, here's the spiders went chopping sideways for a few months, and then there was improvement. And then we know as that improvement came, those fears alleviated and the markets moved higher. Right? And now what happened, right? This virus thing starts to proliferate through the media, and the market starts giving us messages to pay attention to. And the shortest here inverts at the beginning of the year. I pointed this out to at least the newsletter readers at the time, and the 3 versus the 10 just barely gets there. And what happened last week, the 3 versus the 10 is now inverted. This is well inverted. The 3 versus the 30-year has broken through at least the warning level and heading down here. And so this is something that we'll be keeping an eye on. You can see the spiders right there, just on a line chart. Real simple, no candles, no tails, no nothing. It's right at that prior swing low. So it's a critical point here in the short term to see whether it holds here. Can it rally? If it does rally, to what depth? Right. So when we look at things objectively, and we say, well, here's the high. Well, if it rallies all the way back up there, and these lines start perking back up, we say, all right, so something changed from what it is today, and we're being objective about our analysis, right? There's something, I don't know, a vaccine was provided, discovered, somebody told the truth about this thing. Oh, we got the medicine, blah, blah, blah. Who knows what BS is going to come out. On the other hand, we start getting some chopping around here or a minor retracement, which now you can see potentially a head and shoulders top. These lines continue to fall. Transports continue to be weak. This is where the S&P is going. So it's too soon to suggest this scenario, but we have the makings of it that are starting to develop. And of course, we'll keep an eye on all of this and as we do, monitor day to day to see what's going to happen here. Does make sense from a macro point of view, TLT going higher. I don't know if it makes sense, Paul. It does. I think it does, because if this virus is as nasty as they say it is, and as they compare to, they're trying to, okay, once the news media gets their fangs into this kind of situation, let's press the accelerator on the fear thing and blow this thing up. News sells advertising. So let's go back and think about what happened 100 years ago with influenza. Now, we have a lot more medicines today, but, there were so many dead bodies around that they were just digging giant holes and throwing people in the ground. hospitals were full. So, you know, the scare machine is at work right now. And of course, why the markets went down. And if this is all going to actually happen, yes, it makes total sense that TLT bond prices will go higher and interest rates will go lower, because business will shrink, because people aren't going to be going out there to go to work. It's going to hurt business. People aren't going to be buying things. Maybe Amazon stock will go up. Everybody's going to be on Amazon, or to send me chicken soup from Whole Food, you know, send me another blanket. You know, who knows where this all goes. But right now, the charts are saying the fear is real of it. So we'll see what happens there. Silver backing off. All right, gold. All right, had a heck of a run. You know, look to the left. Well, me too, Gustav. You know, I don't leave the house. My wife likes to go to Whole Food and pick up the stuff and all, but you know, I'm just as happy logging on to Amazon, or if I want something else, Instacart, and send it over. You know, I'm having fun here in the green room. I don't care to go out. I used to like to go out shopping with my wife and walk around and look, but you know, anyway, we can peruse the internet. So gold looks great. Probably pulls back a little bit here, and maybe on a short term, that I think that supports maybe the markets at least stabilizing, and my theoretical of some chop for a few days. And here, you know, as far as bonds going up, we see the transports going down like this. So you've got interest rates going lower, yield curves inverting on the shortest ends. You've got the transportation index, which has been underperforming, now gaps down big. And if it continues to move down, yes, all of this stuff makes sense to be fearful of a recession. And of course, will increase the probability of the Fed lowering interest rates. Does that save the day? Maybe, maybe not. You know, God forbid the situation was that, you know, traders all over the world are now with their heads down. They, of course, all serious traders are never going to leave their trading stations, but they're going to put their head down on the desk, you know, and they're going to cover it. They're going to have a cup of tea, and they're going to, you know, be shivering there holding the mouse. But trading is going to slow down. So we have to see how it all unfolds. But the charts are, you know, telling us that there are real concerns here. All right. SPX, well, you see, you know, same level where it's held. And I think we're going to have to see today how far things bounce or the lack of. So let's give it, you know, 15 minutes or so and see how it all unfolds. All yours, Dan.
Sounds like a plan. We have very light inventory, like maybe a record low, but we have 2 gifts today. Pergo, I just sent out an alert, and we sat through a little bit of pain in this for a while, and now it's gapping up. So I said sell half pre-market, but only half. I mean, this is a beautiful gap breakout. Monthly could go to, I don't know, 68, 69, 70. So let's give 30-minute low for the back half. And we did Zulu Mike. We did a put spread yesterday, nice gap reversal. And actually this Wednesday, we're doing a MT live on selling credit spreads. And I actually grabbed a chart of this because this gave, we entered a little extended and said add, so that our average price worked out beautifully. But as a new trade, I mentioned this bar yesterday, and then I mentioned this bar. And I grabbed a screenshot to show you how huge the premiums were on Zulu Mike. So we also have Merck, MRK put spread. Clorox I was watching yesterday as a put spread. I'm watching GSX we found yesterday morning in the wide range bar scan. That's just looks great, both for directional and put spread. It's gapping up here again. Let's look at gappers now. BL, no, I meant BLDP, Ballard. Yeah, remember these little battery stocks? So it's gapping up nice here. For a little day trade, it might fill part of the gap. We had plug the other day. We had a beautiful home run return on that. Guild, somebody in the trading room asked me, what about selling an $80 put? And they are very juicy because Guild is in the news right now in the middle of the corona. That's what got it gapping up yesterday. We actually had this as a long in our swing ladder over this high. The gap messed it up. But this is not a gap and crap setup. This is a gap breakout. Yes, it's extended, but it's still bullish, daily, weekly, monthly. That doesn't mean we can't sell it far out of the money, but I need more information. I need more information because the 15-minute is still bullish, gapped up. It's reversing right here on support. So not now. Fabio, reading yours. Well, I mean, I'm sure it's overblown. I have no idea. I don't know. All I know is what they report on deaths and so forth. But today's journal said that South Korea is very concerned. They have 90 deaths just in South Korea. Italy's, concerned now, obviously. 1930 here, huge gap, but too big. Myrna, another one of these drug gappers, gapping up big. There's our Zulu Mike. YouTube's asking about Golf Tango. I can't tell where it's gapping, but I like the pattern. Yes, I like the pattern a lot. Now, here's an interesting point. And we've done an MT live on it. We've done so many, Greg, awesome MT lives. It's amazing. But the one I'm going to reference right now is a beginning trader would say, guys, you told me, do not buy a breakout from the bottom of the range to the top of the range, 4 green bars in a row. That is true. But there's a lot of other things I could talk about, but I don't have time here. So I'll just focus on 1 or 2. It's a beautiful 1, 2, 3 weekly, but yesterday's bar was the rest. It was our turn, so to speak. It was our something because it was a bearish gap down. Think about this, folks. At the low of the day, this was a nasty 180 reversal, right? But it closed near the high. So if it can now take out today's Tuesday, Friday's high, it has a price void. So I like that a lot. I just can't tell where it's gapping, but that's a tier 1 setup to me. We go through the rest of our checklist. I'm not going to buy it unless the market's holding and on the bullish side. But that's a great setup. I like it. Thank you. Earnings March 2, Arun. Thank you. That's fine. That today's 225, so we have plenty of time for a swing trade. All right, 2450. It's a gap swimming upstream. I got no interest in sale. 101. McGraw, are you in the house? This is a put spread candidate. It's a big gap, but it's gapping over all of this with a price void. I would have preferred the pre-market not to be up, not to be rallying for 90 minutes. But that is going in a window too. Not for directional, but McGraw, and I think we can even go as tight as under Friday's bar. So, even 95-ish, 96, if we can get a put spread on that. And it's earnings, which means we're going to have good juice, but we got to go through our checklist, and liquidity, unfortunately, is oftentimes the biggest problem in trading options. Hey, Debbie. All right, this thing had earnings, but it's no volume. I'm just deleting you. Ever gapping down 43.35. It's rallying here a little bit, but this I'm going to leave on the list for a call spread candidate. This one's gapping down too big for me. So I just come back to it. Pan W 203. Wow. That's getting whacked. Wow. Look at this weekly right here. 203. You know, it's, I don't know what it's going to do. So let's just come back to it. Hewlett Packard is in the news. Just, oh, I think I don't know if it had earnings or earnings plus. It's fighting off a takeover of Xerox, so it's buying back shares. THC is flat and there's no pattern, so you're gone. OFIX getting whacked under 40 bucks. It's gapping here to this prior low, but it's a bearish monthly. Look at that. You had 1, 2, 3, 4 months of bearish consolidation after a nasty breakout failure. So that looks lower, but we don't have a good entry. People usually buying back short spreads. I don't know about that, McGraw. McGraw, your drop down also. McGraw saying people buying back spreads sometimes get generous fill. Well, yeah, sometimes, you know, your clock is right twice a day. But the liquidity of whether you're buying or selling is when you got wide spreads is horrible. So yeah, it just depends if you're going to get cross-filled with another market participant. Golf Hotel, 80 bucks. All right, bearish gap got smacked down, so that was a breakout failure. Clovis, 9, that's a mess. KTOS, bearish gap under all this support. KTOS, that I think is a military stock. That had strength when the military was moving. BCC, no pattern. I can't tell where you're gapping. Tupperware. Wow. Do y'all want to see a bearish trend? Look at that bearish trend. This is, and it's a pseudo head and shoulders right here. Left shoulder, head, right shoulder, little bear flag, tails, breakout failure. Wow, that was, and it's, that thing looks like it's going to zero. That's pain. All right, Trex. Yeah, this was on our bullet. We would have sold a put spread on this bar, but it had earnings today. We'll come back to it. Shack. Ugly. See, it's an ugly gap and it can't bounce. And it's breaking here into the market open, 62 bucks. But it's a big gap support. We got to come back to it. RCII, no pattern. NLS. It's a bullet. Well, what, this one has room. That one may be 30-minute high. It's at a lot of resistance, but weekly and monthly, that could go to $6. Triple W, that's in pain. WBT, no pattern. All right, we sold half of that Pergo. Nothing going on here in Starwood. SLCA.